Nance, it is 21 February, year of our Lord 2023, and I am getting started late. Had to update the software, had a slow internet connection, and I have like 3 other excuses. Sorry about that. So let me jump over into the Zoom room and admit and let you guys in. Sorry about the delay. Welcome, welcome. If somebody could please let me know that you hear me, that would make me feel better. Had a little issue with updating. Everything needed to be updated this morning, and I didn't. I should have done that earlier. I didn't realize I was going to have to do that. So sorry about the delay. It is already 10:07. I apologize for you waiting. Thank you, Vivian. Thank you. Oh, I'm muted. I think you're muted. Testing, testing. Am I muted? Yeah, I'm muted. It looks like I'm muted. So unmute my audio now. Can you hear me? Sorry about that. Can you hear me now? Yes. Thank you, Vivian. Appreciate that. Sorry about that. Here we go. Let's get started. Now, for those of you who are here in the Zoom room, welcome. And do know that you're always welcome to leave a comment, ask a question, speak up any way you want to be heard. I look at the chat box typically as I'm going through the day, through the lecture. So if you would please just punch in your name and time that you got here as usual, and that will serve as my role for the Zoom meeting. If you're watching on Facebook or the YouTube, we are streaming live. This video will be posted in your playlist for this semester. It's a spring 2023 semester at the University of Houston at the Bauer College of Business for personal finance. So if you happen to be watching outside of our cohort, welcome. You're welcome to watch and learn and listen and leave comments. But if you're a student at the University of Houston at the Bauer College of Business and you're part of our cohort, then please do leave a comment. Let me know you're watching either on Facebook or YouTube. And if you, as we go through the lecture, as I ask questions, please leave a comment and then I'll know you're participating as well. So we're going to review last week's assignment. Last week was the assignment 5. And we really talked about consumerism to set up the Credit Crush assignment. We talked about Billy and Sally and how Billy had purchased a truck, a used Ford F-150, and he took it for tires and ended up spending a lot more money than he expected. And he used one of the most aggressively marketed products on the planet. Anybody want to tell me what product that was? It's something that is used quite regularly in our culture of consumerism because this particular product allows us to purchase other products that we may not actually be able to afford because we have this specific product that I'm trying to get you to think about for a minute and tell me what that product is. So if you're on Zoom, you're on the hot seat. I'm looking at your chat, waiting for you to tell me what is the product we talked about last week in the context of Billy's Ford F-150 and the purchase he made for those 4 tires and the repairs and the upgrades, all the things that Sally, the super sales lady, sold to Billy. So there's Billy and Sally on the screen there. And as you know, they became attracted to one another and became an item, a couple. But first, there was some spending going on. So somebody tell me, what was it? What did they use? What did Billy use? What did Sally use to entice Billy to spend a lot more money than he planned on spending? She was the professional salesperson providing services and products from her company, Firestone. Billy was there to buy some tires. He had a coupon. He was there to buy some relatively cheap tires for his Ford F-150. But at the end of the day, he purchased a whole lot more. And he was able to do that with, yes, thank you, Orlando. And he did that with credit. And so that was kind of the moral of the story, is that Billy, just like most consumers, he had a need, and then the need turned into a want, and the want turned into an expensive proposition. And credit was the product. And I say credit is a product because what I want you to start to think about in your life as you move forward into adulthood and being responsible for managing money, and I know many of you have already arrived at that place of being responsible for your money, but also I know that many of you are on the precipice. You're about to enter that thing we call adulthood, where you become fully responsible financially for your own life, for your own expenses. And that's where Billy was about to be. He lived with his parents, but he was right on the verge of stepping out and setting up his own life and being responsible for his own finances. And so, like many, many young people, Billy was in a position to make some choices. And the choices that he made that day, I'm not saying they were the wrong choices, but he started out with a really good intention. He was going to buy these tires. He needed tires for his pickup. And he was going to save the money and pay off that loan. And remember, that loan was a 6-month, same as cash deal. And he would have been able to buy those tires and get the service. He needed a ball joint, a tie rod end, a lifetime alignment, new tires, new rims, valve stems, balancing, and a lifetime warranty, not a lifetime warranty, but a pretty good warranty, a road warranty on the tires. So all of that came to, I think we agreed, it was somewhere around $3,000, which was not a huge amount of money and not a bad investment, if you ask me, when you're looking at a Ford F-150, which is a fantastic vehicle. But Billy, put that on credit, and the credit was, remember this, it was 60 days, same as cash. So he could have paid that off. He easily could have saved the money, paid off the loan, and paid no interest payments, no penalty, no fees. That's what 6 months, same as cash, would have been. On the other hand, he could just go ahead and keep that balance and pay the loan interest. At the end of that 6 months, he would have to pay the full 6 months interest. And we talked about what is the credit card interest. What's the average interest charged on a credit card? I was listening to Investopedia, I think it was yesterday. Maybe it was Investopedia, I can't remember. But anyway, they talked about how the cost of credit for credit cards has gone to an all-time high, and they said it was 25%. So we talked about some interest rates last week, and we were guessing. We didn't really do, this isn't about getting exact on the numbers, but what I want you to do, and what we're going to do this week in this week's assignment called Credit Crush, is you are going to get to play with some of the loans that you set up in your financial plan, and you're going to get to test out some debt payment strategies so that you can see the actual cost of those credit transactions. And it's a great assignment. It's one of my favorite assignments because it's just such an instant illustration of how much credit costs. And so again, back to Billy's story, he could have paid that loan off, but instead he didn't. And so we're going to take a peek into his financial plan over the next week, and you'll get to see some of that in Money Study Group, and we'll do a little bit of it today in today's lecture. But the bottom line is, last week's assignment, we set you up for this week's assignment, the Credit Crush assignment. So last week, your job was to set up, to go out and do a little research and figure out how much should you spend on a new house, your house. And the first part of that research was to figure out how much money would you even have to spend on the house. So you were supposed to do a little research and tell me how much you expect to earn in your selected field. So in your major, what is an average income? And that was your research to figure out how much income you could expect if you get your dream job. And then based on that, you were supposed to do a little more research and figure out how much should you pay in terms of a percentage of your income toward a mortgage. How much is a good, reasonable, prudent, wise amount of a percentage of your budget for living or for the mortgage itself. And so you guys came back with some pretty good numbers. It's pretty easy to find that amount. But what I really want you to do is think about it for yourself. Like if you're making $100,000 and you're spending 25 grand a year on a house, that leaves, that leaves less money for the rest of the things like the car payment and the credit cards. And so your assignment was not just to do the research to figure out how much you were going to make if you get your dream job, how much should you afford for a home, for a mortgage. So you were supposed to go out and then actually find the house that you want to live in the area that you want to live in, and then show me in your financial plan those numbers by updating a data card for the home. And then we did the same thing for your dream car. Got some really interesting assignments back with some cars that were very interesting, and so that was kind of fun. Hopefully, it was fun for you too. These are debts that are just made up. Okay, so you're going to get to go and delete those if you decide to keep working on your financial plan after the semester is over. But for this semester, I required you to set up these debts so that you can see how the debt payment strategies that we're going to talk about throughout the rest of the semester, how they actually impact your lifelong financial plan. So the home was one, the car was one, and then you were supposed to spend about 10 grand on a credit card. And I didn't tell you what the interest rates were going to be on any of these. So I'm looking for you to show me in not just last week's assignment, but this coming week's assignment. I'm expecting you to show me that you have a reasonable understanding of what the actual cost will be for these different accounts. So the mortgage, the car loan, and then the credit card account. So you're going to build those data cards in your financial plan, and each of those data cards has several different fields that allow you to think and have to do maybe a little research, or maybe go have a conversation with a couple of folks in GroupMe. There's lots of ways for you to get that right, but most of you are doing a great job, and I appreciate that. And we're going to go over some of the common mistakes. Most of you are doing a great job, and you're not even going to need my assistance because it's so self-explanatory, really, when you jump in to those data cards. But some of you are struggling a little bit, and honestly, some of you are just waiting till the last minute and not giving yourself enough time to do the assignment correctly, and you're going to pay the price with deductions. But those of you who are doing it early, you're getting the extra points for submitting the assignment early, and you're getting the learning as well. Now, let me just mention this last week, it's a long story. I was out of town. So I was very busy out of town without internet. So I didn't get a chance to grade your early assignments until really yesterday, I guess. And so I'm sorry for the delay. You still got the extra points. You just didn't get a whole lot of feedback. So if you did get some pushback or some deductions on your assignment that was graded yesterday, go ahead and make the corrections and resubmit that, and I'll be very flexible this week in terms of giving you some accommodation for the assignments, because those of you who turned it in early, that was one of my promises, is that by turning in assignments early, you not only get the extra points, but you get some extra feedback from me. And I try very hard to convince you all semester to do your assignments early, because the truth is, the way that money works, the way that managing money works, is if you stay ahead of the game, it works out really well. But if you're going to just be the person who is late all of the time, and you pay your bills late, and you're going to end up with a whole lot of extra cost in your life. And so I try to make this course kind of track with how life works. And so I give you extra points for turning your assignment in early. And if you wait until the last minute, I give you very little slack, very little leeway. You just get the grade you get without much help. So again, because I was late, I'm going to give you some flexibility. By the way, if you turn your assignment in early, and then I give you a deduction and I say, hey, you missed something, fix this and resubmit it. When you resubmit it, if you turned it in early, remember, please pay attention to what I'm about to say, because there's a number of students, I should say, who are not going to hear what I'm saying. And you could be their hero in GroupMe by reminding them that I'm saying this. When you turn in an assignment early and you get a deduction and you resubmit it, make sure you put a note in the little chat box. There's a little message box when you submit your assignment, and just remind me that you submitted the assignment early. And then I gave you some deductions or a deduction. And then when you resubmit it, if you put a little note in there to remind me that you turned it in early, I will be sure to give you the extra 10 points. In addition, if you corrected the issues, then you'll get all of the points, including the early points. But you need to remind me, because I get so many assignments. I don't keep track of, those that are pending resubmission. So you need to tell me that. So please do that. And thanks for that. Okay, I had a quick question. Does interest get compounded if it does not get paid off at the right time? Yes, it does. So I'm assuming you're talking about a credit card or anything, a credit card, a mortgage, car loan. So yeah, the interest is compounded. Sometimes it's quarterly, sometimes it's daily, different ways they compound the interest. So if you pay late, what happens is, on a credit card, for example, or any loan, if you're late, the balance continues to go up. So if you don't pay this month's payment, whatever balance you had, you get interest added to the balance. And so if you don't pay this month's, say it's a $250 payment, if you don't pay it, obviously the balance doesn't get reduced, it stays higher, and then the interest is compounded and it's added to the balance. So that is how that works. Hopefully that answers your question, Aniha. Okay, so let's get back into so this part where you guys did the research, that was great. Most of you knocked that out. It was pretty easy. Here's where I think a couple of you didn't, and this image this image was not in your assignment, and I guess it should have been. I'll make sure it's in there from now on. But so some of you just answered these questions in terms of the basic budget categories, which is fine. And I tried not to deduct if you didn't do the next step. The next step is really important, and I thought I made that pretty clear, but if I didn't, let me make it clear again. So yes, you need to be thinking about and making a list of these expenses, and there may be other expenses that you'll have in your life. This is just some basic ones to kind of trigger your thinking and help you think through what's it going to cost you to live once you graduate and you have a house and you're living in your house and you're paying all of your own bills. What are the categories in your budget going to be? And so what I found was a good number of you just put some numbers by these categories. And that's okay, but that's not the assignment. The assignment is for you to put that into your financial plan. So this is the data card where you have your living expenses, your pre-retirement living expenses. And this data card, it's important because this data card, that number right there, whatever that number is, it does a couple of things. First of all, it tells me that you're paying attention to the cost of your life, your living expenses. This is really an important number for many reasons, but just in terms of your performance in the course and the way that I'm seeing and tracking your progress is, do you get it? Do you understand how much it's going to cost for you to live? So as a person who pays the bills in my family, as a person who knows what it costs for internet, and what it costs for my iPhone, and what it costs for an oil change, and what it costs for gasoline, and for insurance, and for everything you can imagine, I know what the cost is, but I'm having to make the assumption that many of you don't know what the cost is for all of those things. And so when I see this number, and this is throughout the semester, when I see this number and it's low, like $2,500 or $1,500, I'm like, you're missing some big stuff. And The problem with that is that when these numbers are so low, because I know you're not spending that kind of money now, the kind of money that you're going to spend when you're responsible for your own living expenses. I know most of you are not spending that money now, but somebody is. Somebody's paying for your internet. Somebody's paying for your utilities and your phone and your insurance and your fuel, your transportation. Now, maybe you don't go anywhere. Maybe you don't eat out. Maybe you live very frugally, and that's great. But once you get out there and you're starting to work and you have a household, I'm going to expect that you have regular expenses. And so that's what I'm looking for. So I'm looking for those expenses that are in your life. You already changed your birthday, so you should be 10 years older now. If you haven't done that, do that this week. Just change your birthday, make yourself 10 years older, because remember, we're now pretending that you've graduated from college and you're working in that job where you're making the amount of money that you hope to make when you graduate. So in your financial plan, this is what I'm looking for, is to see if you understand the cost of living for that stage in life. So help me here, and just start to think in terms of what's it going to cost you later on. And so this is where I want to see those numbers. So those of you just submitted a list of numbers and categories. I may not have given you deductions last week, but you will get deductions moving forward if you don't give me this screenshot with good numbers. Good numbers meaning numbers that demonstrate that you understand the cost of living. Okay, that's a big piece of the puzzle. And again, these numbers flow into your financial plan. So I'm going to scroll down. This is supposed to be a GIF file. It didn't come through and I didn't have time to fix it, but it's a moving image that shows your retirement analysis. So as we move forward, you're going to see that, and you probably have already seen this, many of you have, there's a section of your plan called retirement analysis. And in the financial planning portal that we're using, the software, the biggest piece of that entire software flows into this retirement analysis. And so when we look at your retirement analysis, which is a big part of your capstone assignment, it's a big part of your financial plan for anyone. The retirement analysis is driven by how much expense do you have in your life, and how much savings do you have in your life, and how much growth do you have with the savings in terms of investment growth. So all of those things flow into your financial plan. So that's one reason why we want to make sure that we have reasonable numbers here, so that you can begin to experience so that you can begin to experience kind of what it's going to look like for you to create a real budget that works for you, that helps you achieve your goals throughout your life. So that's the expenses. Let me take a look I put this data card in as well. So this is the mortgage. And I did this for a student, so I gave it a funky name. But you'll notice just these different fields in this data card, and I want you to pay attention to those. So the first one is, do you rent or do you own? So if you haven't paid attention to that, make sure you click on own, because if you, in the next assignment and in the next couple of assignments, you're going to see that if you have any of these really out of whack, it's going to create a deduction for you. So let's just talk through these real quick, and you can pay attention, maybe take some notes. So the first thing is, do you own your home or are you renting your home? If you have it down there as renting, then it's just not going to flow through to your financial plan, and you're going to miss out on all the benefits of seeing the cost of that mortgage in your financial plan and the projections that you have in your retirement analysis. So make sure you have that right. Give it a name, home name, like I would put the address there if I were you. Generally, purchase year, it's already started because you've already, created the mortgage. Current value, and here's one you probably don't know that's going to give you another opportunity to do a little research. And I want you to do this research. So annual property tax, it's not cheap. My house is paid for. It's been paid for many years, but I still have to pay property tax. The next thing is annual insurance, and that's not cheap either. In this particular situation, I think I created this data card and I put $2,700 for annual insurance. My house is around probably 275, I don't know, something like that. Depends on the day that I get the quote. But and so I pay about $2,700 a year for insurance, but here's the deal. So my insurance is through, because I'm in Galveston County, I have homeowners insurance, but I also have to have windstorm insurance. So my home insurance excludes windstorm, hurricane, and hail. And so I have to pay that separately to the TWIA, Texas Windstorm Insurance Association. And the reason I'm telling you this is because this last week, one of the things I had to attend to was we had a little windstorm on the 24th of January, and it blew some shingles off my house. Well, my insurance company went out of business, and my policy I had a pretty good policy, and it was pretty inexpensive. It covered wind, it covered everything, and it was about $3,500 a year. But they went out of business. And so I had to get new insurance on the 8th of January is when that went into effect. And it was with TWIA and another company for home insurance. And so when I got the quote, I had some options, just like you're going to have options. And we're going to talk about insurance in a few weeks. And one of the big options, one of the big choices you make when you buy insurance is your deductible. And so when I got my TWIA quote from my broker, the options were 1, 2, 3, and 4%. So imagine I have a home that's insured for $250,000, which is what my home is insured for. And so I can get, for TWIA, for the wind coverage, I can get a 1% deductible. That would be $2,500. Or I can get a 2% deductible, which would be a deductible of $5,000. Or I could get a deductible of 3%, which would be, I guess, $7,500, if I'm doing the math right. But what I did to save on my insurance was I got option number 4, which is 5%. 5%. Or, yeah, 5%. So what's 5% of $250,000? It is $12,500 if I did the math right. But so I had a claim. I filed a claim. They inspected my roof. They said, yes, you need a roof. And your deductible is $12,500. So why am I telling you that? Well, because it's actually a real story. But number 2 is I want you to start thinking about the cost of stuff. So you can manipulate the cost of your insurance just like I did. But if you have a claim, now you have a big deductible, which means my insurance company, TWIA, Texas Windstorm Insurance Association, they're happy to say you need a roof, but they're not really going to put any money towards my new roof. I have to do that. And now that I've filed a claim, in order for me to keep that insurance in force, they will require me to replace my roof. And so I already got one quote, and it's like $20,000. I'll get another quote. But my point here is when you do your homeowner's data card, you have all these different pieces of data and they all flow into your financial plan. So we want to try to get them accurate. So in this case, annual insurance, $2,700. If we jumped over into the insurance data card, that's where we actually tell our financial plan about our insurance. And you will do that, not in this week's assignment, but coming soon. If you want a head start, if you own a home, you're going to not just have a mortgage, you're going to have a property data card. And not only are you going to have a mortgage data card and a property data card, because one is a debt, one is an asset, one is a liability. The mortgage is a liability. The home is the asset, and that's why we'll need a data card for that. But in addition to that, we'll also have, where did I go? We'll have I'm sorry, I just eliminated my, we will also have Sorry about that. So we'll have the mortgage data card, we'll have the property data card, and we'll have the insurance data card. That's going to be true on your home and your auto. So that's coming. I just want you to be aware of that. So the insurance amount there comes from the insurance data card. So we've got the property tax. You're going to have to do a little research to figure that out. The insurance, the purchase price, annual appreciation. That's something that is a little bit subjective. You're not going to know, but you're going to need to do a little research to figure out what should you expect in terms of the appreciation of the property, and then also how much do you expect the taxes to go up. And now here's one that many of you kind of miss, and that is annual maintenance. So just be aware that if you own a home, I promise you're going to have annual maintenance. And so in my case, if this were my data card, I would have to think about my insurance deductibles, just like you would do. And I would have to go, okay, I've got big deductibles, so I can't expect my insurance to pay for things like a new roof. So I'm going to have to kind of put that in my budget. And by putting it in my budget, I mean I put it right here. I don't really have to put it in my budget because this takes care of it for me. So I don't need another category in my budget to say maintenance on my home because it's right here. Does that make sense? Hopefully that makes sense. Okay, so that's kind of a review there. I also wanted to show you guys, I've got this is a student, so you're going to do the Credit Crush assignment. I think I just posted it, hopefully. Can you guys, somebody who's watching on Zoom, could you jump into Blackboard and just confirm that week 6 assignment, the Credit Crush assignment, is actually available? Sometimes I can see week 6 assignment. Thank you, Christian. Appreciate that. So great. You have it open. Awesome. So this is, if you have it open, that's probably not a bad idea. I'm just going to show you, this was a student who I saved their Credit Crush assignment because it was a perfect score. And it doesn't mean it's perfect. It just means like I could probably look through it and find a mistake or two, but they did everything and I didn't question it in terms of, I didn't see any big missing things. Now I'll show you this. I just saw this missing thing. So this student, and they didn't get a deduction for this, and you probably won't either. But if you want to be more accurate in your financial plan, you see link to asset. So probably it says none. So that's the auto data card for the auto loan. And that's all good. But if it says link to asset and none. And so what probably happened is this student didn't actually create a property data card. So just think about it like this. If you actually owned this vehicle, this Lexus, doesn't say what it is. Another thing I would do is the loan name. I wouldn't just say your name and a car loan. I would say which car it is, because you could have more than one loan. So, I mean, obviously this is a Lexus. I don't know which model Lexus that is. I could guess that it's an I-250, but I'm not positive. At any rate, be a good idea for you just go ahead and put the name of the car, just little stuff. But if you owned that vehicle, you'd want to create a data card in your financial plan, because that data card takes that asset, that car, or that asset, that home, and it actually creates an asset for you in your financial plan. And that gives you something worth something in your financial plan. And so if you own land, whether you have a loan on it or not, if you own these assets, you want to include them in your financial plan. And in the situation where you have a vehicle, you have the liability in your plan when you create the loan, but you don't have the asset. So that's one thing. I didn't deduct anything for that, I don't believe, and I probably won't deduct that, certainly not this week. But when you do your capstone assignment, all of these little details become little deductions if you miss them. So I'm telling you this so that you can just kind of be thinking about the accuracy of your financial plan. And really, I want you to understand how the whole thing is a representation of your life. Because when we get into your retirement analysis, I want you to understand how it all works. If you can understand how a financial plan works, it will help you tremendously make good choices about money throughout your lifetime. So that's what these are all about. But this week's assignment is really about the debt strategies, but the debt strategies don't work so well if we don't have the data cards correct. So get the data cards correct. This is the credit card. Let's see what kind of interest. So, and again, I don't think I deducted, but I will be looking for this from you to know that right now, today, the interest rate on credit cards is higher than it's ever been. So for this credit card to have an interest rate of 5.2% is highly unlikely, significantly over optimistic, which again is going to really impact the projections, the trajectory of this financial plan. So it's a big balance, minimum payment, monthly payment, but that interest rate is way too low, and it's going to make a huge difference in terms of a realistic projection for this imaginary credit card. So let's see, I think here's where this is the fun part of the assignment. So you will see when you go into your and I'll show you this in just a minute. Before we go, I'll show you where to go to do this. But I need this screenshot from you to show which strategy you selected for your financial plan. In fact, I think I'll do that right quick. I'll just jump into Right Capital. I think I have it right there. I'll jump into Billy's plan, and I'll just play with his login again. See if I can log in from my iPad. Looks like it's letting me. It's thinking about it. So I'm just going to jump into Billy's plan. I've got a plan built for Billy if I can ever get in here. And I'll try and find Billy Adams. I'm going to open his plan. And this is what you're going to do this week in your assignment as well. So it opens to the snapshot, and Billy's plan is kind of a Frankenstein plan because I use it and I play with it. It's like a sample plan. So if, bear with me here. So you guys, if you're not in your plan, if you're watching on YouTube or Facebook, you might want to jump into your financial plan as we go through the next couple of steps and do it with me. It'll help you establish a little bit of confidence as you navigate your plan. Same with those of you who are here on Zoom. So if you don't have your plan open, I'm not sure you can do that with, like, you may have limited screen space. I don't know, but if you can, feel free to do that. So I am now I'm looking at Billy's plan, and I see those upper tabs. And remember, this navigation, from a navigation standpoint, your financial plan has these upper tabs. You've got dashboard, investment, retirement, and then all the way to the right on the upper tabs is your profile. So just get familiar with the dashboard and the profile. Those are helpful. Dashboard, profile. When you go to profile, you see there's all these different lower tabs, and those are the ones you did originally when you set up your plan. Net worth, goals, actually savings, expenses. So if we go to expenses, for example, that's where we would have this monthly expense recap. In Billy's case, we've got the simple approach, which isn't going to work for you. You need the detailed. That's where you would do that. So just, again, a quick review of navigation, dashboard. Dashboard takes you here. And this is where, from dashboard, you're going to go to debt. So this is where we get to click on the action items for this week's assignment. And we can, same priority. These are 3 different strategies, and I want you to play with them. I want you to see what it looks like in your plan to use different debt payment strategies. This is what we do for clients when we're trying to figure out what's the best way forward to help a client get out of debt, or at least, just make wise choices with their money. So same priority for all debt is one. You can see in this case, Billy's going to save a redonkulous amount of money if he uses this, because what we've done is we've added $550 to his actual payments. So he has all these debts and he's making his payments, but in this case we said let's add $550, and by doing that, because he has such a redonkulous amount of debt, it reduces his overall lifetime savings by $20 million, which is crazy. So it's probably crazy. But if we did highest to lowest, and then I hit refresh, let's see what that does. So that saves him $42 million. But this is what I want you to do for yourself. Lowest to highest balance, that's the other one. I hit refresh. So this is just how you do it. And again, you're in dashboard. You go to the debt tab, the lower tab is debt, and that's where you will have this button where you can actually change the strategy for your loans. Now notice Billy has a lot of debt. He has a lot of different loan accounts, and most of them are make-believe because Billy has become a sample. So they're not all real, but they're for illustrative purposes. Just like your plan has these debts for illustrative purposes to help you understand how this works. So in this case, let me make sure you see there's more to it. This is the screenshot though that I'm looking for. So you're going to have this screenshot or you will get a deduction. Okay. This tells me that you basically took a look at the debt payment strategies and you picked one. And this is the screenshot that shows what the results of your choice would be in your financial plan. So this is an important screenshot. But in addition to that, I want you to tell me what you learned when you played with these different options. So I want to know what you found. I want you to do a little playing around. It won't take long, but it's important for you to pay attention to what you're seeing. And don't forget, you can play with this as well. So if we wanted to, just stretch, really pay off the loans quicker, say that Billy gets a raise at work and he wants to really attack his credit. Now we're paying $2,300. Let's see, what would that do? Some of these numbers are just not working because something's out of whack in his plan, and I'm not sure why. But for your plan, just be aware that you can add or you can add a little money, and feel free to do that to see what it does to the trajectory of your debt. So here again, up here you have 3 tabs: strategy, payment, and details. And what you're going to want to do is just take a look at that and get familiar with it. So it lists each of the accounts and the balances and the interest rates and the minimum payments and the current payment and the proposed payments. So just be aware that that's there. And then when you jump over to details, you can see that you have all of these different loans. So just don't forget that this is here for you to do a little deeper dive into your own debt. What should our debt tab look like right now before the assignment? I currently only see proposed and not the current. Let's see. Maritza, I'm trying to see. There's something in the way here. I currently only see proposed and not current. I only see proposed and not current. So let me see what I only see proposed. Maritza, I'm assuming you have some data cards for your debt. Do you see the action items? You do? Is there anything under? Do you see this part under your... So when you click on action items, yes, I have car, mortgage, and card. And what happens if you click on this? Do you see what we're seeing now, Maritza? Do you see the 3 different strategies listed? I'm waiting for your answer. When you click on this action, yes, I refreshed and now I see it. Great. Yes. So you probably won't see proposed until you actually make a change and hit refresh. And then you'll get this screen that shows the total savings. Whoopsie daisy. So that's, in a nutshell, that's really the crux of your assignment this week, is to play around with those strategies. And I really hope that you will, well, what we're going to do is, so I'm just going to give you a heads up. This is what's coming. So profile is where everything happens in your plan. That's where you add accounts. And this is, by the way, we talked about property. If you had an insurance, you can add your home insurance, homeowner's insurance here, your auto insurance. That goes, it's everything that you add to your plan can be added from right here. So property, it looks like Billy already has property. So he has his primary home. And this is what that data card looks like for his home. And I think he's also got a car. Yeah, he's got his car loan, his student loan. We don't have insurance added. We could do that. We do have insurance there. So that's what that data card looks like. You'll be doing that. That's not required for this week's assignment, but just to give you a heads up of what's coming, these are what's coming. So back to the navigation, I want to make sure you know where to go. Dashboard, this week you're going to spend some time right here in the debt tab, but you're always going to want to pay attention to what you have built in the profile. And you got this blueprint over here too, which is cool. We just added that. We will get to that. By the time you work on your capstone, you'll have a pretty cool blueprint. And that blueprint will be a representation of your financial plan and the goals that you have in your life and the cost for those goals. It's a really good way just to illustrate everything that's built into your plan, and it'll be kind of a cool part of your capstone assignment. So it's got net worth, goals, income, savings. But I want to show you one more thing before I let you go, and we're almost out of time. So we've got dashboard on the left, upper tab. Dashboard is upper left. And every time I click on one of these, notice that there's a whole new set of lower tabs. And you'll become familiar with these lower tabs as we go through the semester, because that's how I'm going to teach you about asset allocation and some of the other things you're going to learn. So when we get to retirement, which is a big part of financial planning, and it'll be a big part of what you learn this semester, you'll see all of these different lower tabs: analysis, stress test, Social Security, Medicare, cash flows. And so I want you to pay attention. Just know that it's here. This is not an assignment. It's just to make you aware of what's coming. So we have this analysis tab, and we have a lot of tabs under here that help you take a deeper dive into your financial plan. So if you're a client, if you're someone getting financial planning advice from a guy like me, these are the tools that we use to kind of not just illustrate your financial plan, but try to make some good, wise choices in the context of your financial situation. For you, in this course, this is where you're going to show me that you understand how all of these different elements come together. And I'll teach you that as we go, but right now I wanted to just show you this part of your financial plan, because this is really where everything flows in, and it's the most complex and most helpful part of the financial planning software. And so you see these action items under here. So if you look through your plan, you'll see that as we go forward, Everything that you're doing in your financial plan is going to show up right here. So if you want to see what if this, that, or the other thing, what if you changed this or that, this is the page, this is the screen where you can go and make real changes in your financial plan and see what that does to the analysis. And this is what we're always working on, the probability of success. So, you know, most plans, we say we want to get to 85% probability of success. But the real deal is we're constantly looking at these different elements of the plan to make adjustments to the actual choices you're making in your life that will affect or impact the trajectory of your financial plan, your financial life. So obviously, if you save more in your 401k, it's going to make a big difference in that probability of success. If you spend less money, that's going to make a big difference in your probability of success. If you decide to retire much later or much sooner, that is going to make a huge difference in your probability of success. So that's where we're going in the in the next several weeks. This is kind of where the rubber meets the road. But all of these pieces of the puzzle that we're building today and next week and last week, especially this week, Credit Crush, I want you to learn how important it is to have good strategies to pay off your debt. And so that's what you're going to do this week is you're just going to take those loans that you put into your plan and you're going to select the best debt payment strategy. And in the process, you're going to just play around and get familiar with all those numbers and learn as much as you can. And I don't want you to feel pressured to become an expert here. I just want you to be able to play around with those loans that you built and create a strategy in your plan. Select a strategy based on these three options and just see what happens to your plan. And we'll come back to this again, but this week, that's what Credit Crush is all about. And don't forget, you can also adjust this if you want to see what it does. But I'd start with 0 just so you can see what these different there are 3 different debt payment strategies. Same priority for all debt, highest to lowest interest rate, and lowest to highest balance. And before I let you go, last thing I'm going to say is if you're not familiar with Dave Ramsey's baby steps, one of the baby steps is just to pay off all of your debt. And so to do that, Dave Ramsey teaches this thing called the snowball effect. If you're not familiar with it, you might want to Google it. You might have it may be somewhere I have some posts from the snowball effect. I wrote about it in my book, Make Your Money Count, but it's a very simple approach. And here's how it works is you take the lowest balance that you have. Let's say you have 10 credit accounts, okay? 10 accounts that you have debt. And you decide you want to get out of debt. You want to do what Dave Ramsey says and become debt free. Believe me, that's a powerful thing to do. It's a great goal to have. And so if you chose that goal and you needed a plan to achieve that goal, the snowball effect is a great strategy, a great way for you to achieve that goal. Here's how it works. Assuming you have 10 different debts, you take the one with the smallest balance, and maybe the payment is only $15 a month, but let's say you owe $500 on that account. And you decide you're going to pay that account off as soon as possible. So you just take your extra $50 a month or $100 a month and you get that paid off. Now you have that extra money, whatever amount you had monthly for that account, plus whatever extra you can throw at it, and you take it to the next account, the next smallest account. Maybe it's $1,000 this time, and you get that one paid off. Now you've eliminated 2 accounts that you've paid off, and you've eliminated those accounts and that debt. And so what happens is psychologically, we typically, human beings that is, pretty much we all have this in common. We feel good about progress. It's one of the reasons I asked you at the beginning of the course, think about what kind of progress would you have to have in your life? If we met 3 or 5 years from now, what kind of progress would you need to see in your life to feel good about your progress? What would have to happen in your life? What kind of things would need to change for you to feel good about your progress? And so this is the snowball effect in paying off debt using the smallest balance first. Really, just it's a psychological thing more than anything. Technically, it's probably not the best. You get to play with your loans and see which one works out better mathematically. But psychologically, paying off the lowest one first has some pretty immediate and pretty significant benefits from a psychological and motivational standpoint. And so for that reason, it's definitely one of the best ways to become debt free, is to just decide you're going to do it and start paying off the lowest loan first. It's a great strategy. It works. So it's one of the strategies here. But you get to decide as you play around with your debt this week to see which one actually works better and which one you prefer and why. I want you to tell me which one you selected and why. That's the whole point here, is for you to learn how this works. And so in the process of doing that, I hope you learn a lot. And don't forget to look at the details. You can see the details here for each of these, and it's kind of fun to watch. So you see what happens with each strategy that you select, how the payment changes. There's monthly and annual. So the computer is going to say, okay, if we use this strategy, we're going to be applying this much money per month to each of these loans. And you get to check that out and see what that looks like if you click on the details tab right there. That's really not part of your assignment. What's part of your assignment is to tell me what you learned. And so for you to do that, it might make sense for you to click on each of these tabs and just become familiar with what happens in your financial plan with respect to those debts that you have when you make these selections for each of these 3 different strategies. So I'm going to see if there's any questions. I'm taking a peek into the chat box now, and I don't see any questions. So what I'm going to do is give you guys a minute to ask a question if you want to, and I'm going to jump over to the live stream, and I'm going to end the live stream because it is time for us to finish for the day. I hope you guys have a great week, and I'll see you next week. If you're watching on Facebook or YouTube, we're about to sign off, but please, before you go, leave a comment below, like the video, subscribe to the channel, and you'll get a notification whenever we do this again. So thanks for being with us. Have a great day. I'm going to hit the end